If an individual does have a professional corporation, then they should definitely transfer their life insurance policy to their professional corporation. You may ask why, and the simple reason is that if the policy is owned by the corporation and the corporation is paying those premiums, well, they're paying those premiums with pre-personal tax dollars. If the life insurance policy is owned by the individual has to earn more money in order to have enough after personal tax dollars to pay the same amount of premiums. On death, there really is no difference if a policy is owned by a corporation or if it's owned by an individual. If it's owned by an individual, life insurance benefits are not taxable, so the individual winds up with monies in his or her hands. If the policy is owned by the corporation is the beneficiary. Again, the death benefits is not taxable to the corporation, and the corporation has the ability to pay those amounts out to the shareholders of the corporation tax-free. So the beneficiary would be in the exact same position, except that if the corporation owned the policy, then they would have had the benefits of being able to pay the premiums with pre-personal tax dollars. I've got an example below. Say the premiums for a life insurance policy are $200 a month. It would take the individual would require roughly $400 of pre-tax dollars to pay the premium, whereas if the premium was paid for by the corporation, the policy was owned by the corporation, it would take that corporation only $235 of pre-corporate tax income in order to have sufficient after corporate tax income to pay the life insurance premiums.